What's up, everybody? Welcome back to the channel. In today's video, got a lot of cool things to share, more puzzle pieces. Even though the markets are just being very, not pleasant. Portfolios are down, everyone's crying. This is just a short-term period. It's just like what's happening right now. I feel like we can't get emotional, and of course, you want to protect what you have. And going forward, though, we know that this is a risky space, and so short-term price action is going to look it's going to be really scary. But we hold assets, and the assets we talk about on this channel, I think, are going to be the ones that survive long-term, because we know how this space, we can see where the direction, we can see the trends of where things are going. So have some information I just find interesting. We've talked about LCX in the past. We've talked about them. I hold LCX. I feel like long term, they're one of those that is going to survive because of mainly regulation. What you see here, actually, they just had $6.8 million in a hot wallet compromise. So this is a big deal, and case in point of why you need to have a hardware wallet. I still have people asking me, had a good friend ask me just recently, well, why are we using, a hardware wallet? Why I can just leave it on the exchange, unless you're staking something and you're making like passive income from that. And even there's honestly ways now to do all that, even through a hardware wallet like Ledger and Nano. So, this is a good example here of why we need to have a hardware wallet, or at least personally, that's why I use them. But you can see they confirmed that they did have a compromise of one of its hot wallets. So like a lot of those big exchanges, what they do is obviously they use a lot of different hot wallets, I guess. They move money around, keep them in cold storage. Honestly, who knows exactly how they do it. But they got hacked, and it was identified that $6.8 million worth of different coins was stolen. So they did confirm it. And it looks like, they had some Ether, USD. One of them was Quant. One of them, you see right here, based on their investigation, $6.8 million, including Sand, Quant, Link, Engine Coin, and Maker were stolen. So they're saying they've not shared any plans to help return the stolen funds. I'm sure they will. Any of those big exchanges, you can roast them if you don't get your money back. So just kind of check if you use LCX. Really, if you use any exchange can be hacked. Not your keys, not your crypto. Why going forward, it's important to be safe. So you don't want to have all your apes gone either. So don't fall for any scams. That really sucks when that happens. I've been hacked before, so I totally get it. But you want to be safe. Keep it on a hardware wallet. But where is the space going? Even with this recent short term, even with Bitcoin still going crazy, and we're still tied to Bitcoin. Compared to other markets, we're still so small. The thing is, short term people are really worried because essentially the 50-day and moving average has moved below the 200-day average. So it's essentially formed a death cross. And we won't get into, the nitty-gritty of the technical here. There's plenty of other good channels that go over all of that. But essentially, they're saying that previous death crosses were insignificant in Bitcoin over the past 2 years. For instance, a 50-200-day EMA bears crossover back in March 2020, back when all of the stuff was unfolding first. It appeared after the price had fallen from nearly 9,000 to below 4,000. So really, I feel like long term, we're going to keep going up. We know that crypto's here to stay. Now, it's interesting though, because long term, where do we expect Bitcoin to go? That's the thing. If we know that in the future, the systems and ecosystems of value are really going to be the ones that are containing that value, the ones that are like holding everything in. So we want to look at how can we navigate that as efficiently and effectively as possible. They're saying this time, though, the death cross looks dangerous because growing investor concern about the Fed's decision to unwind its loose monetary policies. I think that a lot of that, though, has already been absorbed by the market. So they're saying typically rising interest rates make holding volatile assets like Bitcoin less appealing than government bonds, which offer guaranteed yields. This is proof that it acts like a risk asset. So, going forward, they're saying as a result, the overall reduction in cash liquidity coupled with the death cross formation could trigger further sell-offs in the Bitcoin market. However, that is unless the price rebounds from its current support level around 40,000. So essentially, long story short, 40,000 is really a very good level of support. We're at $42,000 right now. So as of the time of this video, 2:07 p.m. Eastern on the 9th of January. So if we obviously continue to go down below that, some analysts that I follow have showed that we could even get down into the 39,000 range, and that would definitely be bottom line support. If we go below that, we're definitely could be a confirmed bear market. But again, this is all short-term stuff. You can't ever predict. No one is going to be able to predict 100% of anything. That's why I like to look at things more macro, because you can just, if you can spot trends and you can just see where things are going, it's a way where you can just make way better, more educated predictions. So the big thing too, going forward, we talk about what is crypto in the future, even though things are going down, even if we dump even more, it's like, okay, relative to where we were a year ago, okay, a year and a half ago, 2 years ago, we're only going to get bigger. You see here compared to precious metals, I think that it's interesting. I don't know if you can see this chart here on the video. You can pause it. We're still so small. Silver is 1.28 trillion. This right here, it's at the time of this, they're showing 2.35 as the overall market cap. But I mean, you can just see here a size relation. If you're watching the video, gold is 11.4 trillion. That's interesting. In 2021, $10 billion has been pulled from gold funds as Bitcoin posted new all-time highs amid rampant money printing. Yeah, the most significant store of wealth known to man, which is actually real estate, is thought to be roughly 4 times as much as global GDP. So eyeballed at around $340 trillion, at least 160 times the size of crypto's market cap. But crypto, I feel like, since the technology is tied into all of these systems, we're still so early. I definitely don't want to keep saying that because everyone says that. We all know that. We all know we're early. If you're watching this video, you know that you're early. But it's crazy because compared to other things, like the equities market, we're $2 trillion right now, but the equities market is $122 trillion. So crypto, we're still so small, but we're going to be taking over large chunks of that. When these systems that we know are coming on live, once they had a brain fart there, once they come live, once these companies, I keep saying projects, once these companies have more adoption, as more enterprises come out, honestly, we probably don't even know all of the behind the scenes connections. We only see a small portion of what the people at the top want us to see. So, you can only make your predictions. But my point here is that we're even short term, if we're going down, now is not the time to be scared. Now, short term, could we see lower prices? Sure. I've not been buying anything yet. I want to see more of a, if we are going into bear, all right, how low are we going to go? I want to start seeing some firm support at a bottom, and then I like to just wait until we start seeing some momentum, some solid momentum going up, and then that way we can confirm that we're at the lowest spot, because you don't want to be buying a falling knife. But you can see right here, crypto is just going to take over a lot of this, because it's going to allow, even if we come up on like a liquidity crisis, which, I mean, let's face it, if we continue to print money, we're going to have some kind of crisis like that, So even with the Fed reeling in their, tampering how much money they're pumping in to the economy, how much debt that they're buying, that's still going to have an effect on things. So we're going to have to, deal with that at some point. With all of this debt, you see the public debt is $226 trillion. Crypto is going to be the solution that helps solve this stuff. How exactly it plays out, who knows? Regulation, though, is going to be a big thing this year, is going to be regulation. I think that's what the markets are waiting on. It'll be a big thing. Hopefully this SEC case is solved in Ripple's favor, and which I'm confident it will. But that's going to be a big catalyst. I feel like, we're still just January 9th. And I mean, who knows where we'll be by March, April. We could be completely different, have some, even if it takes that long for the settlement to come out, boom. I find that interesting too, just looking at what other crypto industries expect from regulators in 2022. So I'll link this article if you want to go through the whole thing. I found some of them interesting though, because they just take people that are in the space and that are leading things, like Hatu Sheikh of DAO Maker. He's the co-founder and chief strategy officer of DAO Maker. He was basically saying, summarizing, 2021 was a stop-start year for crypto, and DeFi's regulatory bodies have not clarified their stance on the industry. Yeah, you think, but he is saying that he believes blockchain technology must be nowhere near the regulatory scheme of things because the tech in its application supersede the need for oversight. They bring much-needed facets like transparency and decentralization to the forefront. Regulating blockchain technology will only adversely impact our evolution as a society. So, and I agree, because it's not just financial. It's not just the financial sector. It's so many other things. You see here, Jason Allegrante of Fireblocks. I know Fireblocks is not, if you're in the XRP army, you may know Fireblocks' connections to the whole SEC thing and the former SEC chairman. But anyway, Fireblocks as a whole, you see here, he's the head regulatory counsel and global chief compliance officer. He's saying that 2022 is going to be tumultuous with regulators sending confusing signals, definitely, around the world in a slew of high-profile enforcement actions, particularly in the United States. Exactly. And you see here, and shout out to Bearable Bull, like he said in his video today, the United States, we are the exit liquidity for other markets, for the Asian markets, because we don't have regulatory clarity here. So we're missing out, not being able to take advantage of things while we can accumulate assets at better prices. As we go from the current phase of trying to fit cryptos into existing asset categories to the future phase of adopting regulatory frameworks that treat digital assets as digital assets, we're going to see growing agreement around crypto regulation. So I agree. You see here, there was actually part 2 of this article. Again, I'll link both of them if you want to go and look at all that. But I just think that you see here, Danelle Dixon of Stellar Development. I like Stellar. I think they're great. He says he's actually the CEO and executive director of Stellar Development Foundation. So he says, I think we've turned a corner on engagement from policymakers. It was heartening to see how inquisitive and informed many reps were at the December's House Finance Subcommittee hearing, which was good, asking questions in good faith to learn more about the technology and value blockchain provides. So I thought overall that hearing was good. I watched it. I thought that there was a lot of good points being made. Brian Brooks, all of them were great. I don't think we could have gotten here without all the industry advocacy we've seen this year and support from the very vocal crypto community. So, yeah, I feel like 2022, though, we're going to see more clarification, and that's going to only be a positive benefit to the crypto market. Johnny Liu of KuCoin says that previously the rhetoric of the regulators on cryptos was extremely negative, restrictive tone. I get it, but he's saying he kept thinking about how to prohibit all these coins or how they were doing that. The past year, though, shown that the restrictive approach led the regulators of many countries to a dead end. Now they're beginning to think differently. So, like, hey, how can we make the crypto market civilized and safe for everyone? And I think that's the key point to realize, is that we are still, even though a lot of things are unclear, 2022 is going to see positive momentum in that direction for a lot of different things and different like layer ones and solutions, particularly that are going to help with things interoperating. So I find it interesting too, this right here. Now the Motley Fool, take them for what it is. I find Polkadot, though, is one of these companies that I am looking more into, especially if it goes down a little bit more. I feel like it has a lot of potential, and it's going to be one that survives. I feel like it's going to be one in the way that they approach interoperability. I feel like Polkadot is going to be one because they do it in a unique way, and their partnerships are great. And you see, Polkadot is, it's not like others too. Like you can stake it, and that's where a lot of folks are doing like for long-term passive plays. is Polkadot getting the adoption that they are. Now, Polkadot is, let's see, you know, you see they're $25 today. So you get 4 for $100. 4 for $100. This thing is going to, I mean, it's going to see $100, you know. So not financial advice for sure. It's just something to look at. This will likely, for it to get to that market cap, what would Polkadot actually have to be to, let's actually look and see what it would take. So right now they're at 26 billion. What would it actually take though for them to be at $100? What would their market cap have to be? It's going to be somewhere right at about $107 billion. So looking at though what they're able to do and how they're actually able to provide that interoperability. Now, Polkadot actually, you see here, they give you the ability to interoperate with a wide variety of blockchains in the Polkadot network. Thing is, though, you're still going to need other interoperability solutions that's going to connect everything. So they're actually, you see here, what's very interesting is the telecom giant integrate. You see here, the giant is Dutch Telecom. So I find that it's very interesting that Polkadot is being pushed more, and it should be one that you definitely should have on your radar if you don't already follow. Now, if you're watching this, you may even already have some, but it's one that I've looked at more to, especially in regards to the interoperability, and I feel like with their partnerships, Dutch Telecom, they're actually teaming up with DOT and investing in by purchasing some tokens. So they recently announced that their subsidiary company, T-Systems, plans to use Telecom's infrastructure to participate in the network as a validator. Now, T-Systems, you see right here, T-Mobile. Now, side note, I found that really interesting. Their branding, T-Mobile and Polkadot's branding is like, it's very similar. Well, that's because they're connected. So they're actually participating in and securing and maintaining the Polkadot network. So they're a huge telecommunications company. And also, we know if you're a Hedera holder, you see right here, Dutch Telecom, they are a governing council member of Hedera. So you start investigating where all these connections play out to, and then you see, oh, Polkadot's aiming to solve the lack of interoperability between blockchains, and they do it in a cool way by utilizing their relay chain, which is the central chain of Polkadot. So I think, again, just kind of wrapping that point up, I feel like Polkadot will be a good play going forward. But speaking of Hedera, I was digging more into the use cases. I know some of you had asked about, well, what are some other use cases of Hedera? And so I really am particularly into the use cases regarding music. Now, I'm still evaluating. There's several other platforms that I really like. Seeky is one of them that's actually related to Hedera, as well as Opulus. I've been looking into both of those. So for too long, people have just not been able to benefit from being able to distribute and market their music. We've been held, like if you make any kind of music, it's been very difficult to get through the gatekeepers of the communities, even get your music out. So Tune FM is a very interesting use case built on Hedera, where they allow the tokenization of the music process. Now, I'm likely going to use Tune FM. They're one of the top like NFT based platforms that. The thing is, though, you don't want to get pigeonholed in as a creator. You don't want to have to worry about your music only being available on certain platforms. See, like right now, if you want to distribute your music, there's so many licenses. There's literally like 5 or 6 different licenses that govern different parts of how you get paid. It's a nightmare. If you thought crypto was confusing, try figuring out how, like music licensing and all of the different avenues of that. So. And that's been one of the major drawbacks for people making money. So Tune FM is solving that. They are disrupting the Spotify model. The Spotify model of music now, where you pay $10, is this essentially there's no value in even being a creator. So Spotify, they pay an abysmally low amount. But they're not a social media platform. So Tune FM, building on the Hedera token service, they are allowing creators to basically have a social media community and more intimately connect that experience, artist to fan. They're a tokenized music marketplace for music NFTs, streaming royalty micropayments, and live social audio experiences for artists to earn directly from their fans. So if you're holding Hedera, if you're watching this video, smash the like button, of course, if you're still watching this and you're a Hedera supporter and you think they're going far. This is one, like I said, it's such an amazing use case. This is going to be what gets Hedera adopted more and more, is being able to do, literally, they're going to tokenize music. They're going to, now their white paper, this is the Jam token. So essentially, right now, Spotify pays such an abysmally low amount. You get like literally 0.006 to 0.0084 cent per play, and an artist would need hundreds of thousands of plays per month to break minimum wage. On average, it takes over 2 years to get artists paid these anemic amounts in the first place. So because there's so many licenses, you see here right now, the current music, they have so many different things that you have to deal with on a daily basis. Like right here, the licenses you have to get, there are performance licenses, mechanical licenses, synchronization licenses, download licenses, and streaming licenses. So their unique approach, which, and this is the actual white paper for the Jam token, basically their approach is they've created a groundbreaking new product, a new vision to solve all of these problems, where it's a non-exclusive hybrid music license for artists. So like, let's say I had a single, wanted to put it out, I could upload it to TuneFM. Now, by the way, a lot of artists, if they're uploading to like MediaNet or like DistroKid or CD Baby or any of these other distributors, they'll basically take like even an MP3 or any kind of lower quality file, and they can distribute it, and now it will basically be uploaded. Any DistroKid, TuneCore, anything, Songflower, any of them that they use, they're going to go through like an open API called MediaNet, and then MediaNet kind of helps aggregate, but you have to deal with all of these licenses. So TuneFM, they are basically proposing a new hybrid model of that licensing. It's a non-exclusive hybrid license, so it combines all of those complicated licenses that basically prevent an artist from making 90% of the money from the royalties and streaming that they should. Other people get it. Other people that don't have any hand in even the music creation process. So, and the main problem is also too, we've never been able to, let's just say you should get more streams or you should get more money per stream. The reality is, like, our current fiat systems were the problem. Like, essentially in the past, what is it they're saying right here? Credit card fees of 30 cents plus 3% made it impossible for artists to get paid by the stream, and made it cost prohibitive to buy individual songs in one simple transaction. So they basically, it's so much, you can't do it. You can't get paid a micro amount. Now, what they've done with the Jam token is that they've introduced, like, TuneFM will have several different structures, and you essentially, the Jam token, there's not going to be like monthly subscription fees or anything for the artists, but the fans are incentivized to participate in the ecosystem. Now, there's going to be fiat on-ramps and off-ramps, and you'll be able to trade your Jam token for actual fiat or a stable coin. So essentially, long story short, they've made an experience where you, as an artist, you will get paid in Jam tokens. You're going to get paid a lot more than you would through Spotify. And what's incentivizing people to actually use the network? Well, one, you as a fan, you can literally earn money from listening to people's art, from listening to music. Whereas before, now you can't. You cannot. I mean, does Spotify pay you? No, they're not going to pay you. So the problem is they've never had, Hashgraph and Hedera is really going to help with this, because they've not ever been able to micro those streams down using Hashgraph. So they discovered Hashgraph and they're like, wow, this is the future, and now we're going to be able to issue money. And so essentially the Jam token is just, it's going to empower that whole ecosystem of TuneFM. Now they're not very widely known yet. Hedera and HBAR, though, will be some massive players in many, many industries. It only makes sense that they would be involved in music. So they're saying the Jam token creates a global music marketplace and ecosystem where artists get paid in crypto for every second of streaming, and it's high fidelity downloads of their music. So basically, fans can earn crypto by listening to tracks the artists and labels wish to promote, as well as reviewing songs and albums, and then they spend the jam tokens listening to music of artists that they love. So there's several different payment structures in there, and it sounds very, very promising. And essentially, like I said, you'll be able to trade those jam tokens for actual fiat currency. So there's a lot of different things that they're doing here. Now, artists and fans are both on the supply and demand sides of the market. So they're incentivizing, after you stream or listen to a song for 10 times, then you own that song. You don't have to continue to pay for it. And it's actually going to be more cost effective for you as the listener to listen to it. So they're gamifying the music economy. Using micropayments and behavioral economics as a means of gamification, it allows us to hard code economic micro incentives for our users, both artists and fans, to perform actions that benefit the ecosystem at large. So the more you use it, the more you do, the more you're going to get. So it's going to allow the whole marketplace too. You can also sell NFTs. So that's going to be a big thing, is you can mint as an artist, you can mint community tokens, and you can let your fans invest into you as an artist. You can get your fans, your community, your audience to invest in your tokens. So as you rise up in value, as you get more streams, they own some of that incentive as well. They own some of that value of like direct monetary value. Never before in the history of humanity have we been able to now create art and have a community that supports that art, have a direct financial benefit to that art growing. So if you as an artist create NFTs and you sell them, it allows you to basically bootstrap yourself, build up an audience, and that audience grow with you as time and actually economically benefit, because the token that they hold, they own ownership of in some of your actual assets and your content. So it's a really interesting model that they're going after. So it's one, like I said, I'm going to do myself, and I have 6 singles ready for release this year that I'm going to go through a platform like this and do this and figure out like what is there's so much opportunity with this and with Hedera and other tokens like that. I wanted to end this video on that because I know some of you were asking about that a lot. A lot of you are Hedera fans as well. So this is going to be an awesome use case to get more network adoption of the Hedera system as well. So hopefully you enjoyed this video. I'm going to wrap it up with that. Have a great rest of your day wherever you are. And thanks for watching. Like I said, leave a like on this video. It really does help. I know I hate to have to ask every single time, but it really does help. And I like making these videos for you guys. Hopefully you find them entertaining and useful. And we'll see you on the next video.